Hi everyone, I hope you guys well. This is Julio Pinero. I'm going to be doing this midweek market focus. Today is the 10th of September 2014. Um, what I'm going to cover today is the few bullet points that I have in here. First one is hold your winners and cut your losers. And the question is how? Well, you can increase your reward to risk ratio slightly. That would be one of the options that you can use. Um, and then what you have to do after that is to make sure that it works. Okay, so you basically have to back test it to build boost up your confidence towards it, and then you know it works. Because you need to see that it works um, before you start doing it and doing it over and over and over again. Um, so basically, as you increase your reward to risk ratio, you'll be able to, or you'll be able to afford to lose more trades, and you can still make money. Okay. Um, I don't think I've covered it for a while, so I'd like to cover a particular table, which is called the success rate table. Uh, Bear with me. So basically, let's assume that you place, let's say, 10 trades. Right, so I'm on Microsoft Paint. I'm going to show you the success rate. So let's say you place 10 trades, 1, 2, 3, 4, 5, 6, 7, 8. Put two more down here. 9 and 10. Okay, so now here you lose that one. -1, -1, -1. You lose that one too. And that one, so it's 1, 2, 3, 4, 5, 6 trades in a row. And then when you win, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so that's 6, and these 4 will be plus 3%. So that is 8, 3 to 1. Another 3 to 1. These are all percentages, by the way. And another 3 to 1. And another one. So out of this lot here, that'll be, these are all percentages. Let me just put it clear, including these ones as well, yeah? Well, not the best drawing ever, but that will do. So that'd be 3, 6, 9, 12. That's plus 12%. And then here, it'll be -6. -6%. So overall, will be plus 6%. Okay, I'm gonna put a smiley face down here. There we go. Beautiful. So basically, you lost 6 trades in a row, and obviously every time you lose 1% of your account. And then when you win 3%. So you still make money. Okay, and this is called negative success rate. Okay, and you still make money, right? So this is very important. So you don't have to, basically you don't have to win more trades than you lose. You can still lose more trades and you can still make money. Okay, that's the whole idea of it. So just make sure you remember the negative success rate theory, and so that then you can increase your reward risk ratio and you can go for 3-to-1s every time you get it right. So you can go for 2-to-1s, 3-to-1s, and then when you lose, you're gonna lose the full 1% or maybe break even or so. So basically, you just need to catch a few winning trades out of 10 trades. You just need to catch like 2 or 3 winning trades, 4 winning trades. And how about now if you get 5 or 6 trades right and then you only lose 4? Okay, then this whole thing is gonna change. This will only be, so let's say this will be +3 and +3. Okay, so that would be 3, 6, 9, 12, 15, 18, maybe 18% against 1, 2, 3, and 4. Should be 14%. Okay, so these you can count it in quarters, okay? Because if you're doing this only works, well, primarily works on daily charts, okay? That's when you can go for like 2-to-1s, 3-to-1s, 5-to-1s even, and you're not gonna place 10 trades on a daily chart, okay? Um, just on Forex, I mean, it'd be quite a lot. So in 3 months, so yeah, 10 trades per quarter, that will make sense. So that'll be around like, I don't know, 3-4 trades in a month, something like that. Okay, so then it works, and that's only per quarter. So even if you only make 6% in a quarter, that'll be 12% in a year, which is quite a lot. Okay, it'd be the same, the account times 4. Okay, if you make 12% in a year. Okay, so 6% you double the account, 9% you triple the account, and 12% will be times 4. Okay, right, that's what I wanted to show you. I wanted to show you how important it is to know um, the number of winning trades and losing trades you need to have in order to make money. So basically you can have more losing trades. Not a problem. So on the ETX account you can see a lot of red numbers, but when you see white numbers, which are the numbers, obviously the winning trades, those numbers have to be much bigger, much larger than the small losing trades. Okay, then you can go for that. That means that you're doing the reward risk ratio on a 2-to-1 basis or 3-to-1 or 5-to-1 basis. The more you increase it, the less you need, the less number of trades you need to get right. Great. Now I'm gonna show you the usual that I go through, which is the CAD Swiss, which I've been um, covering for quite a few months uh, and years even. Um, so since then, we're looking to buy down here on this inverse head and shoulders, that trade there. We talked about this trade down here as well, did really well. Um, and now basically now still pushing up, giving high highs and high lows. Now on the income generator, yesterday gave 8 trades. So we got right click formulas, income generator, and then gave a trade there yesterday which got triggered in today. And it was based on this bar there. Okay, so that is a seller bar on an uptrend. The target is the white line at the top, and the stop loss is 100 pips below the low of the bar. So it'll be somewhere down here. Okay, somewhere down there. Great. Now that's clear. High highs, high lows, uptrend, pulls back a little bit, and you look for buying opportunities. Awesome. Now let's go through another one that I usually go through. Aussie Swiss and Aussie Kiwi. Sorry, I want to cover the Aussie Swiss as well, which looks even better. Aussie Kiwi, um, there is giving another income generator on an uptrend, giving high highs and high lows. Okay, so that's the pullback. It's pulling back down. Now it is on an uptrend. It is giving high highs and high lows. There is not price action there. There is a seller bar in an uptrend. That's the pullback there. So I wouldn't be looking to place a potential on that one because there are better ones than this in this moment in time. If you do get a low test bar, then yeah, which will look very similar to this one here, the Aussie Swiss. The Aussie Swiss, because now it's a buyer bar, is not coming up as an option for income generators. Half an hour ago and a couple of hours ago, it was a seller bar. So as soon as it changes, there we go. As soon as it changes the color and it's flashing, as it was 2 seconds ago, it's gonna be an income generator. So if it's flashing, you can consider that as an option, obviously. Um, and also even better is actually a low test bar on an uptrend, giving higher highs and higher lows. Okay, so it'd be like that. So higher highs and higher lows, uptrend, beautiful. Okay, phase one, phase two, phase one, phase two. Okay, phase one, phase two, phase one, phase two, and so on. So that is the high highs and high lows. Entry up here, stop loss down there, target up here. Don't worry, I'm gonna go through that again, so don't panic. Um, the entry is 5 pips or 10 pips above the high of the bar. Okay. For an income generator, as it is, will be 5 pips above the high of the bar. So it'll be 85.95 plus 5. So call it 85, 85. Call it 86.01. Okay. So above the psychological figure, above the rounded number. It's always good. And the stop loss will be 100 below the low of the bar. So the low of the bar is 85.12. So 100 below the low, it'll be 84.12 with a stop loss down there. And the target is the white line. Okay, so it's in an uptrend. You Let's say you place the order tonight. Doesn't necessarily mean it's gonna get triggered. If it doesn't get triggered, not a problem. You just cancel it. If it triggers, you just stick to it and you follow the rules and just trade the stop loss as it goes along. This is the Aussie Swiss, which is the opposite as the Euro Aussie. The Euro Aussie is obviously on a downtrend, giving lower highs and lower lows. That is a high test bar bouncing off the 20 moving average on a downtrend. It has pulled back up enough, and from here, it's got a high potential to go down like that. Okay, then you can put some lines up so you can have a much better understanding of the current market conditions. And just need to put a line here and a line down there. That's your channel. That's a 20% selling zone. It's just off the 20% selling zone. Looks fine still. You can also pull, it might never get triggered, you can pull back up a bit further. In that case it'll be better because it'll be closer to the selling zone, which means there'll be more space to make money. Okay, as it goes up a little bit, there'll be more space to make money. So it'll be from here all the way down to there, as opposed to from here down to here. Okay, right, so as I said, Euro Aussie, that's the opposite as Aussie Swiss. Aussie Swiss is this one here, which is also bouncing off the 20 moving average also giving a low test in uptrend. This is flashing, as we said before, because of the color of the bar. Okay, it's absolutely fine. Okay, it's absolutely fine. It's absolutely fine, and it's in an uptrend, so it's fine. And you'll be looking to trade in the direction of the trend, which is the way the Inca generator works at the beginning of the phase one. Okay, so we're looking to buy in the direction of the trend, and this is also bouncing off a resistance becoming support, which is very powerful in trading. So the ceiling of the house is becoming the floor, as we usually say. Um, let's see if there is any other level here at the back. Nothing there. Fine. If it pulls back down a bit further, it'd be even better. If it pulls back down to the 50 EMA, it's gonna give a much better reward risk ratio. Okay. Now for the income generator, you cannot play much with the reward risk ratio because you have a set of rules there that you have to follow, as in the parameters that you have. So you have the white line as a target and the 100 below as a stop loss. Obviously, for the market trader calls, you have other strategies which you can even trade with no target, even if you wish to do so, or you can put a target. It really depends the way of trading that you have, and how aggressive you are with the trading, and also your personality as well. So it depends on several factors. Either way, 2-to-1s and 3-to-1s is the way forward as I see it. So when you win, you have to win big, and when you lose, you have to lose maximum 1%. When you lose, you don't have to lose the 1%. You might lose, you might have moved your stop, which in that case you lose less than your 1%, or maybe it's break even. In that case, is nothing there that you've won or lost. Okay, so this is what I'm looking at myself for tonight. The setup looks pretty clean. Besides that, let's see what else we have. Besides that, so basically all what we've covered today is pretty much all the Aussie crosses really. So all these currencies, they're all Aussie related. The three of them: the Aussie Kiwi, Aussie Swiss, and Euro Aussie. Now on the let's have a look at some stocks here. Let's see. Right, let's see what's coming up as a buying option. There we go. This is, oh, okay. Take a moment and spend some time on this particular one. For those of you who haven't found the stock yet, the code is HICL-LON. Again, this is HICL-LON. Just type it on your keyboard. So just select the chart anywhere, just doing a left click on it, and just type the code. So it's HICL-LON. Click enter. There we go. Okay. Even if you don't have the subscription for stocks, it'll come up and probably be 1 day delayed. Okay, you'll still get it, and you can still look at the whole picture and see what you're doing. So here, market is giving higher highs and higher lows. Beautiful higher highs and higher lows. So these are the highs, and these are the lows. Uptrend, higher highs and higher lows. And that's the phase 2 pushing back down. Here is coming up as a trade alert, so you can put an entry here and a stop just beneath the 50 EMA, and then you can go for a 3-to-1 reward risk ratio. Okay, so your stop will be something like that. call it 1.4. So twice as much, maybe 2.8. So that'd be a 2 to 1 reward to risk, and then you have to add an extra 1.4 for it to be a 3 to 1 reward to risk ratio. Again, it applies, as you can see, it applies for everything. Stocks, commodities, indices, for anything. Reward to risk ratio can be used for everything. Okay. Right. Let me just get rid of all these. There we go. Now, let me just make it a bit smaller so we can see the whole picture climbing up. I have to say it looks pretty clean. There's not price action there, but still, because the entry is quite low, which means there is quite a lot of space to bring it back up again. So that's the first one that comes up, not bad at all. Next one, International Public Partnership. It doesn't even fit. Right, bring it back up. There we go. This is beautiful as well. He's giving high highs and high lows. Pretty clean chart. Copy and paste that line, put it up here. It's not as good as the other one because the entry is quite close to the top, and this bar is not right at the bottom. So to be honest with you, I've seen better than this. Doesn't necessarily mean you have to take it, or doesn't necessarily mean you should not trigger it in. I will wait until it comes back down a bit further, if it's gonna come back down further, and wait until this level here potentially becomes support of the 50 EMA with a lot of space to go back up again. Okay, so you can put this on your watch list for the next few days, for tomorrow and the day after tomorrow, and then see how it develops. Next one is National Grid. Not bad. High highs, high lows. Lotus bar is, the pullback is not great. Seems to be retesting this level here. So yeah, I have to see whether you consider this one of your trades. So you have to go through your checklist and see if it actually meets your criteria. The next one is ARM Holdings, which is nothing there. Okay, so those are the options to buy, and the options to sell are: first one, Rolls-Royce, nothing there, this is flat, leave it alone. Next one, nothing there, looks very messy. Next one, nothing there, and also the foot has been climbing up, so there won't be very good opportunities to sell, and this is kind of flattish down here. So overall, there are quite a few to buy. All the ones that came up apart from one are good to buy or to place an order tonight until 8 in the morning, which is when the market reopens again. Those are the ones that came up, which they look pretty good. Definitely, two of them look really good out of all of them, and there'll be many more options too. What we have to do is to, based on the same principle, you have to scan through the market and see how good they look, and look at the pattern, and look at the phase 1 and phase 2, and put some lines on, look for price action, look at the moving averages as well. Yep, so you have to go through all these points one by one, which is all part of the checklist that we usually use, and then see how powerful it is, and then go through the reward to risk ratio, see whether you put your target based on the lines that you have, and the stop, and then see whether it's giving you a 2 to 1 or 3 to 1, and those are the trades you have to look for. Okay, so I'm gonna leave it here for now. As I have 11 minutes to upload this, so it'll be ready by 6:30. I hope you enjoyed it, and I'll catch you all soon. All the best. Speak soon. Bye now.